Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Thursday, October 25, 2012. Well, a change of trend today in a candle with a higher high and a higher low and a white bodied candle. The white body suggests that the buyers have made net bullish progress as opposed to the sellers for the previous two trading days, and it does suggest that there is potential for higher levels. But looking at where the market's closed, it's closed around the midpoint level, and that suggests that neither side has taken control of this market. The buyers have attempted to take control. They were strong enough to take out the previous high. They did show some commitment, but when they tested up above the cloud, and we can see the breakout above the cloud, they failed to maintain price action up above there, and there was strong rejection from that area, as there was for the previous day's trading. So 2 days in a row, the top of the cloud has acted as resistance for this market. Now, with the buyers not really strongly supporting this change of trend to the upside, there is potential for the market to test to lower levels, but we do have this strong support at the 1700 round number level, so that will limit any potential downside for this market. The white body does, however, suggest that there has been a swing of momentum in net terms to the buyers, so it does suggest that there is potential for the market to trade higher. But if the market does trade higher, obviously this top of the cloud will offer very strong resistance, and we can see that the resistance offered by the cloud is quite dynamic, and it's actually moving up quite sharply, and the resistance offered by the cloud is now up around roughly around the 722, 723 level, just below where the Tenkan-sen is trading. Now, in terms of the Fibonacci extension, and now that we have a new first time frame uptrend, we're examining the relationship of the first time frame uptrend to the previous time the market was trending up, and here we've seen rejection from above the 61.8% level and the 78.6% level, and the market has closed just at the 50% level. So that does suggest that there is potential for a change of trend to the downside. In terms of the Fibonacci retracement of the prior downtrend, and here we've seen with this change of trend, the market test above the 23.6% level and test to the 38.2% level, which is a major level, and we've seen the price rejection here coinciding with the probe outside of the top of the cloud, and that also suggests that with the lack of support by the buyers, that there is potential for a change of trend. So we do need to watch the low of the current candle for a potential lower high and lower low. In terms of the trend channel that I've drawn recently and the stack trend channel, if we do see this market come off, then we do have potential support and a potential target down around the 1681 level at the moment, and as the trading days go on, this level will continue to the downside, but that 1681 level at the moment coincides with this swing high roughly about 1680, so that could be a very important target that the market may meet over the next couple of days. But there isn't any sign that we are going to trade down there. We do have very strong support around the 1700 level before the market trades down to those levels if possible. In terms of Ichimoku, neutral market, once again trading within the cloud for the third day now, and just within the cloud, so technically just neutral. Bearish in the medium and long term time frames, with the markets trading below the Kijun-sen, the pink line here, and below the Tenkan-sen, the green line. And interestingly, the Kijun-sen is now pointing flat, and we've seen price action attracted back towards there. So that is something to be aware of. Very often when the Kijun-sen is flat, it attracts price action. The only problem with that is that we do have resistance around the top of the cloud that may limit the market's ability to test up to those levels. As we trade on throughout the next trading days, the top of the cloud will actually meet with the Tenkan-sen by the looks of it, and that will strengthen the resistance around this area, around this 1727 area roughly. So that will be very strong resistance to the market testing up to find equilibrium at the Kijun-sen, which is trading around the 1748 level. But if we are going to see a bullish market, the market will need to break out up above the cloud, and it's not likely that we will see that. Down below here where the market's trading, 1700 level is very strong support for this market, and then we have some minor levels down at 1687 roughly and around the 1680 level, so very strong support all the way down through to the bottom of the cloud at 1667.